What is going on, guys? Welcome back to the channel, and in today's video we are going to be focusing on market structure. A lot of people, I think, have a really basic understanding of how this works, and I think it really faults them in their trading. Now, simply put, market structure, what most people's understanding is something simple like this. If the market's in an uptrend, then it's making higher highs and higher lows. And if the market's in a downtrend, it's making lower highs and lower lows, right? Simple enough, and at its core, that is correct. But that's where most people stop, and they do not actually try to find the nuances and understanding of two things. Number one, the fractal nature of price action, and number two, the key swing points to actually identify reversals or market structure shifts, or continuations, or what I call break of structures. Now, in this video, we are going to help you identify those two things, and we are going to show you in real time how you can actually identify a correct market structure shift or reversal, and also how you can stop from getting faked out, right? How many times are you, let's say like this, perfect example. You're looking at the 4-hour time frame. You're identifying, we're in a 4-hour uptrend. We're in an uptrend in the market. I'm going to go long today because I'm going to follow the trend, something like that. And then you're down on the 1-minute time frame looking for an entry and you get smoked. I'm going to help you identify how to stop yourself from doing that with just some key rules of thumb. So we're going to get into that in just a moment, but real quick, I do got to give a spiel, guys. As you know, I'm putting out this content completely for free and just giving you guys everything I know. Now, if you are somebody who is buying a prop firm challenge, specifically with Top 1 Futures or Tradeify, if you could use my code ZARB, Z-A-R-B, for Top 1 Futures, or for Tradeify, if you simply just click my link in the bio and then use whatever code they currently have offering, it goes a long way for me. And, you know, I'm not asking for $1, but just simply using my code if you are already happening to purchase a prop firm challenge goes a long way for me, and it really helps support myself and the ability to keep putting this content out totally for free. But enough of that. I want to get into the charts, and we're going to go over some market structure mastery. So stay tuned. All right, guys. So before we actually get into some real chart examples, we're going to go over these two schematics that I have written out. So number one, this is our market structure shift correctly identified, and this is what we're going to be talking about on how to spot a reversal. This example right here is going to be an example of our continuation model and also how to identify the fake out. Now, what is a fake out? That would be this cluster of price action right here. This would be your fake out, where a lot of people get induced into looking for reversals, and we're going to go over that in just a moment. But first off, let's identify the two key terms that we're going to be using. We're going to be using MSS, which stands for market structure shift, and we're going to be using BOS, which stands for break of structure. Now, what is the difference of these two things? Well, a market structure shift is what's going to signal a reversal, and I'm going to get into how you identify that in just a moment. A break of structure is going to be the term to identify continuation. And let's go over that first. So I know this is like a really clean example, and the market is usually not this clean. And I'm going to go over some more complicated examples in a second, but just for the sake of learning, let's just keep this simple at first. So let's say this is our price action. Market is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? Market is in an uptrend. Let's just say this is a 15-minute time frame. Now, what makes a break of structure? This is important to understand how to identify this. A break of structure is only when the market makes, let's just use this example as an uptrend, but obviously it's going to be the exact same thing, just reversed for a downtrend. But for the purpose of an uptrend, a break of structure only happens when the market takes out the most recent higher high that made a higher low. So in this example right here, we don't get our break of structure until we take out this swing high, because this is the last swing high that made a higher low that made a new higher high. So that is our break of structure and our way to identify continuation. Now I have this drawn out right here because just for the purpose of trying to identify like a continuation, let's just say there's some type of 5-minute fair value gap in here. Market retraces to that 5-minute fair value gap. So it puts in its higher high, puts in its higher low, retracing to an imbalance, and then makes another higher high. Now we have another break of structure. Now, first thing to understand, this is going to be our protected low now, right here. Why is this now our protected low? Because this is the last swing point. So this is the last higher high that made a higher low, that made a new higher high. So if we are going to follow the trend and focus on the structure, we are going to remain in an uptrend until we take out this protected low. That is the only point that we would have a valid market structure shift. So for the purpose of trailing stops or getting into new entries, this is going to be your protected low to place your stop loss underneath. Again, because it's the last higher low that made a new higher high. That's important. Let's say this is a 15-minute time frame. There's going to be a fractal nature. This is where the fractal nature of price action comes in. In this 15-minute price swing, there's going to be something like this if you're zoomed on the 1 minute, right? Something like this. As it's going up, it's going to be doing something like this, and then it goes higher. This is where a lot of people get messed up, and we're going to talk about that in the next schematic. But as this is happening, it doesn't matter if you're on the 1 minute and this is like, oh, we made a new higher high and a new higher low and a new higher high. We have a break of structure right here. Again, it's important to identify what time frame you are focusing on to follow structure for. So again, good rule of thumb that I use, if you're trading on the 1 minute time frame, you could use something like hourly higher time frame levels, 15-minute structure, and then 1 minute entries. So in this example, let's say this is a 15-minute time frame. You might look for 1 minute entries, but you need to follow structure on that 15-minute. So you're only going to get a break of structure when the 15-minute time frame that made the higher high, that made a higher low, gets taken out. So in this case, this is now your protected low, right? Continuing, market makes a higher high, higher low. Let's say it taps into another 5-minute fair value gap, order block, VWAP, doesn't really matter. And then it makes a higher high. This is now the new break of structure. And following market structure, this should now become your protected low right here. So now, for the purposes of trailing stops, you could have your stop trailed to here, because once we broke structure, this should now be your protected low. Or if you're getting into a new trade, once again, your stop loss could be placed here, because this should be the protected low, because this is the last higher high that made a higher low, that made a new higher high. Now, we have one more swing point. So market makes a higher high, we get our break of structure, market makes a higher low, and then a higher high. So this is now our last break of structure. What happens here though? This now becomes your protected low right here because it's the last higher low that made a higher high. When this gets taken out in this price leg, we now have a market structure shift because this was originally a protected low. In theory, if the market should continue its uptrend, this low should hold. So when it gets taken out, it now turns into a market structure shift. That is the key difference. That is how to identify an actual market structure shift versus a continuation. Now, let's go into an example right here because this really identifies how the fake out works. So once again, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now, this is where people get messed up because this is a incorrect market structure shift right here. What a lot of people will be doing is looking at something like this. So the market retraces, makes a lower high. Again, this is substructure. This whole cluster of price action right here is the internal structure within the external structure. Again, if this is a 15-minute time frame and you're now on the 1 minute or the 5 minute, you might be thinking you see a market structure shift in here. But if you're following 15-minute structure based off your model, you are only going to get that market structure shift when you take out this low. This is going to be your protected low. So anything in between is consolidation, chop, or manipulation. Now, what people do is they see this lower high and lower low, and they identify this as a market structure shift right here. And then they do this, right? How many times have you done something like this? I'm guilty of it. I've done it many times. They get short, and let's be realistic. Most of the time they end up getting short somewhere down here. They're looking for 2R or 3R or 10R, doesn't really matter. Their stop is up here, and then boom. Starts looking good for a moment, and then they get wrecked, and stop loss hit. And they wonder why. They think I had a valid market structure shift, but they didn't. Why is this not a valid market structure shift? Because the last higher high that made a higher low, the protected low was not taken out. So everything in here is just substructure. So one more example. And this is a more realistic example, right? Because usually the market is not moving in a straight line. This just really highlights how the substructure interacts with the external structure. And if you can focus more on the external structure, you will have an easier time reading price and not getting induced into every little internal structural move. Once again, market makes a higher high, higher low, higher high. So this is our break of structure right here, right? So this is our protected low. Stop losses need to go here. The only way we could even think about shorts is if this low gets taken out. So once again, what happens in here? We kind of make a higher low, then some people are getting induced here thinking this is a lower high that's going to become a lower low. They're getting short in here, right? How often do we see it? Stops are here. They get stopped out and boom, trend continues. Why does it continue? Because we never took out the protected low. So once again, market makes its higher low, higher high. So we have a new break of structure right here. So this now becomes our protected low. What happens in here? We kind of get an inducement, lower high, potential lower low, but really it's just chop, it's consolidation, it's manipulation, whatever you want to call it. Our external market structure is protected here. And what do? We make a higher low, a new higher high, and we have a new break of structure. So what is this? This is our next protected low right here. Right here. Now what happens? We put in our lower high or higher low at the moment, potential lower high, and then we put in our lower low. This price leg right here is where we get our market structure shift. Notice how I label it, market structure shift right here. Now, quick thing to understand. Let's say you took a short here. Stop above the high, targeting here. This one would have worked out, right? In theory, this short would have worked for you. But this is not a valid trade, even though it worked out. We all know trades that are not valid can still work, okay? This is not a trade that if you said, Zach, check out this trade that I took, I would say, I don't like it. I don't care if you made money. Why is that? Because you anticipated that you were going to go short before you had the market structure shift. So this is low probability. Again, low probability trades work out all the time. It doesn't mean that it's not going to work. But if you're trying to follow and understand market structure at its fundamental level, this is not a valid trade for a reversal. I don't care if there's a high time frame level up here. Again, I'm not saying you can't do this ever, because there's models within models and there's ways to trade up here. Like, I'm not saying anything is wrong, but for the purposes of understanding and following true market structure, that is not a valid trade. It is only a valid trade on this price leg, on this price swing. And why is that? Because this is where we got our market structure shift. This is the last higher high that made a higher low. It's where our last break of structure came from. This is an internal structure. It did set up a short, but it's not valid until this price leg comes in, takes out the protected low right here. Market structure shift, and then this is where we look for our regular model. We're looking for a fair value gap in here, an order block, a VWAP, again, whatever the case may be. But the point is, this is where we get our market structure shift. Okay, so now I hope this gives you a bit more of a fundamental understanding of how the market structure works, but now we're going to get into a couple of key examples with real price action, so stay tuned for that. All right, so let's get into a real chart example. Now we're going to be focusing on the NASDAQ on the hourly time frame. But again, I really want to make this clear. It doesn't matter what time frame you are looking at. Price action is fractal, but we're going to use the hourly time frame to just give like a general medium level where you can really focus on the structure. But I promise you, what you see on the 1 minute, this can be used all the way up to the 4 hour, the daily, the weekly. But again, focusing on the hourly time frame here. Let's start right here. Market is making lower highs and lower lows, right? Right here, we have a break of structure, signaling the market is in a downtrend, makes a lower low. It consolidates, chops around, puts in a lower high, and then what does it do again? Puts in a new lower low, taking out here. So once again, we have another break of structure, continuing the downtrend. Now, this is where we're going to start focusing. Where would the protected low be if this hourly downtrend is going to continue? Well, if this is the last break of structure right here, then this is the last lower high that made a lower low. So if we drag this out, taking out this swing high would be an effective, not break of structure, it would be a market structure shift because this is the last lower high that made a lower low. So then what do? We consolidate, we put in some internal structure, higher low, higher high, but again, on the 5 minute, you might be identifying a key market structure shift here based off a 5 minute time frame. But if we're just focusing on the hourly to keep things simple, we don't get a market structure shift until we take out the most recent lower high that made a lower low on that respected time frame. So in this case, that is right here. Now what do? And this is where we can go over the fake out example, right? A lot of people, if they're just looking at the 15-minute time frame, they might be looking at this as like what they need to see as a protected low, right? And they might be going up. We're at resistance, like general retail resistance right here. I'm going to get short somewhere in this price action, right? Especially we're on the 1 hour right now. Let's actually zoom in here, because a lot of people, based off this 1 hour, are going to be trying to short in here, and they're going to be on that 5 minute and that 1 minute time frame, right? They'll be doing something like this. So let's stick to the 15 minute even. They'll be doing something like this, trying to get short down here, right? And how often do you see it? Stop up here. They're thinking, I'm going to target all this imbalance or whatever. I'm just looking to follow the trend, and stop above here or above here. Doesn't really make a difference. And then let's play some of this out. How does it work out for them? Boom, they're stopped out. Now, why was this not valid based off the hourly structure? We never took out the hourly swing point. Let's go back to the hourly time frame. Let's get rid of this. Let's get rid of this. If this is our market structure shift, right, because this is the last lower high that made a lower low, then where is our protected low? Our protected low is right here. Why is this the protected low? Because it's the last higher low that made a higher high that put the market structure shift into motion. So anything above this protected low, we are actually going to be focusing on longs based off of the hourly structure. Now, where could we look for longs? Well, we have a very clear 1 hour fair value gap right here. What do? We tap right into the beginning point of that hourly fair value gap and we move higher. Now, what happens here? we put in a higher low and we make a new higher high, right? What does this become? Not a market structure shift, right? This is now a break of structure. Why is this a break of structure? Because we already had the market structure shift right here. Lower high, lower low, higher high, higher low, higher high. This is your market structure shift. This is now your retracement, your higher low, and your break of structure. Why again? Keywords. Market structure shift is signaling the reversal. It's the terminology for the reversal, that key swing point that starts the reversal. The break of structure is the continuation. So this is a continuation of this new hourly uptrend that we are in. So what does that mean? If this is our most recent break of structure based off hourly time frame and price action theory, this is now going to be our protected low. So anything below this would signal a market structure shift on the hourly. Until that happens, this could be our line in the sand to continue looking for longs to follow this structure. We also have targets. Right? We have clear imbalances up here. We have relative equal highs right here. That's where, you start putting other factors into your analysis, right? But again, I don't want to focus on that today. I want to focus solely on the price action and the market structure. But just, I can't not bring up these equal highs. They're pretty obvious right there. But anyway, this is now our protected low, right? So let's play out some of this price action. What did we do right there? Tapped into an hourly fair value gap, held it. Even though we wick through a fair value gap, it's only inversed or invalidated if we get a closure beneath it. This low was protected. This is our retracement. Again, if we're down on the 5-minute or something, I bet a lot of people are getting short in here, right? They're going up. Higher high, higher high, higher low, lower high, lower low. They're identifying this as their market structure shift, and they're getting short all the way down here or something and looking for this. And it just doesn't work, and they get stopped out. Again, because they're not following the structure. So once again, break of structure, new higher low, protected low stays protected. We make a new higher high. What does this become? This becomes our new break of structure. Now, when you start factoring other confluences, this is how you can really begin to get a higher win rate and identify the key draws on liquidity. Right? Because where does it look like we're going now? We got these equal highs right here. We're probably headed there. But we could play out some more of this price action. And what did we do right there? Boom. Equal highs were taken. What did we get right here? Higher low, higher high. We had a new break of structure form right here. Now, where is our new protected low? Right here. Let's play some of this out. And again, it doesn't have to be perfect. This one kind of got taken out, but it was kind of swept. We went higher. Point is, I think you guys are starting to understand what I'm talking about. Again, quick overview. Market's in a downtrend. Break of structure. Lower low. Lower high. Lower low. Then higher high. Higher low. Market structure shift is the first swing point that marks the reversal. After that, we use our key protected lows, so our key swing points, as our lines in the sand, and we say as long as we don't get back below here, I'm going to look for continuation of the current trend we are in, because we had a 1-hour market structure shift. So then we put in our higher low, retrace into a fair value gap, key level, doesn't matter, break structure. Retrace into a fair value gap, key level, protected low stays protected, new high, break of structure. New protected low is right here. Higher high, higher low, higher high, higher low, higher high. We take out the equal highs. And listen, it's never perfect. Technically, if you're just really following this like textbook style, this is the last higher low that made a higher high, and then we took out those equal highs. This is where sometimes it just doesn't work. Like nothing's perfect, man, So technically we took it out, but we just rallied and continued up higher. In this case, I could say that it's not as surprising because we kind of just created more equal highs right here. You know, like we kind of swept it out technically by a tick, but a lot of times if we sweep like a really high time frame level by 1 tick, it's kind of hard to sometimes think that that's going to hold forever. In a way, you know, if you're more zoomed out, it's like we kind of just created a triple top now, which is even more engineered liquidity. So again, nothing is really perfect. This became a liquidity sweep, but I think you guys get the point. Look how many times it worked and your lows were protected just following this simple rule. So again, don't want to make the video too long. Please, if you guys like this one, subscribing to my channel means everything to me. A like, a comment goes a long way. And again, if you guys are buying a prop firm challenge with either Tradeify or Top 1 Futures, make sure to check the link in my description. You could use code ZARB at Top 1 Futures for 55% off currently. And Tradeify, I think they got 30% right now. There's no code. I don't have a code for them, but if you use the link to then go purchase the account, again, goes a long way for me, helps support the channel. But thank you so much, guys, for tuning in, and I will be back next week with another video. Peace.